This year we have seen mortgage rates absolutely soar. In fact, at one point, the average was over 7%. The economic climate has meant that inflation has gone through the roof. And the way the Bank of England have combated that is by raising the base rate. In fact, on 14 consecutive occasions, the base rate was increased. This has led to a 2-decade high of 5.25%. And the knock-on effect, of course, is that mortgage rates have gone up. However, with the good news that came out of the Office of National Statistics this week, that inflation was actually down to 4.6%, down from 6.7 last month, are we starting to see a little bit of a turning of the tide? Well, in this video, I'm going to be answering the question that everyone's asking at the moment: when are mortgage rates going to come down? Hey, it's Sam here. Welcome back. Today we're going to be talking all about mortgage rates and, most importantly, when are they going to start coming down. But before we do that, please do me a massive favor and subscribe to the channel if you don't already. I know there's loads of you out there that are watching these videos but aren't necessarily subscribed. I'm trying to get to 5,000 subscribers by the end of the year. We've got over 200 videos now on the channel to get your teeth into, and I am going to be releasing new videos weekly. So to make sure that you don't miss out on any, don't forget to subscribe, and of course hit the notification bell so that you are alerted every time I release a new video. Let's get back to it. This week, the Office of National Statistics released new inflation data which showed that the rate of inflation in the UK was down to 4.6%. Fantastic news. This was down from 6.7% the month before, and the main contributory factor we are discovering is the cap on energy bills. Now, as I said in the intro, one of the things that we have seen over the last 12 months is that inflation has gone through the roof, and the way in which the Bank of England have been able to combat that is to raise the base rate. And as I mentioned, we have seen a number of base rate increases consecutively, with only a recent reprieve of a couple of months of the Monetary Policy Committee keeping the base rate as is, resting at 5.25%. Now, last month when the inflation rate was released and we didn't really see a decrease, we were told by Andrew Bailey, the governor of the Bank of England, to basically get ready for the base rate to stay high for quite a while, which obviously many people were then getting concerned. And, you know, in terms of my clients speaking to me at Grand Union Finance, were getting very, very worried that their mortgage rates were just going to get higher and higher and higher. Now, it is important that we do understand that, of course, with the Bank of England base rate being higher, that will have a knock-on effect to mortgage rates being higher as well. So the fact that we were told that the base rate was going to stay high for a prolonged period of time was not necessarily good news for people with mortgages or people that wanted to get mortgages or refinance in the near future. However, the base rate itself is not the only mechanism for determining the cost of a mortgage. Most mortgage lenders won't actually lend their own money. They will borrow it from other larger institutions, the likes of JP Morgan, the likes of Citibank, the likes of RBS. These large banking institutions, they will lend money out into the market and it filters down and it gets eventually lent out to yourselves as mortgages. Now, how much it costs a smaller bank to borrow money from a larger bank is based on something called swap rates. And these swap rates are basically fluctuating rates that can change daily, and they're not exactly based on the Bank of England base rate. They're more to do with projecting how good the economy is. Now, what I mean by that is that you can actually borrow money for a certain period of time, say 2 years or 5 years or 7 years, and in so doing, the rate that you will get charged for doing so will kind of be based on where we think or how well the economy is going to go in that time frame, if that makes sense. Up until fairly recently, these swap rates have been quite high, which has had the knock-on effect that most lenders have had to increase their own mortgage rates to accommodate the cost of the money to lend to you. But with the recent gradual decrease in inflation and this most recent pretty large decrease in inflation, this has given a bit of confidence back to the market. We saw the pound improve against the dollar over the last couple of weeks, and now we are starting to see that swap rates are improving too. So this is pretty good news if you are somebody that wants a mortgage, because we are starting to see that this is having a knock-on effect to the average rate of a mortgage in the UK. The Financial Times actually reported fairly recently that they believe that we were pretty close to the average mortgage rate dropping then below 4% again. And actually, just this week, we have recommended a mortgage to a client who has a buy-to-let at a rate of 3.9% on a 2-year fixed rate. That is the lowest I've been able to get in quite some time on the buy-to-let side of things. But the reality is that probably the rate of inflation is going to hover around this kind of mark for a little bit of time now. So when are we really going to see mortgage rates properly drop? Well, as much as I said that a lot of this was based on swap rates, if inflation stays roughly the same, swaps rates will probably stay roughly the same. So then we're back to our good old friends at the Bank of England to drop their base rate. So when's the base rate going to go down? Economists are predicting that probably May is the earliest time that we're likely to see a drop in the Bank of England's base rate. But this month, again, Andrew Bailey, the governor of the Bank of England, has said to only expect a maximum of 2 drops in the base rate this year. And even if we get a full quarter or even maybe a 0.5% drop at those times, that means that we're only going to get a maximum of a 1% drop in the Bank of England base rate, which would take it down to 4.25% by the end of next year. So guys, in answer to your question, when are mortgage rates coming down? Well, they are coming down a little bit at the moment, but they are going to start stagnating. And the reality is we're not going to start seeing real decreases until the back end of next year. And we're not going to get anywhere near where we have been over the last couple of years until we get into 2025. So good news and a bit of bad news. But what do you think? Let me know in the comments. When do you think we're going to start seeing big decreases in not only the Bank of England base rate, but also the average price of a mortgage here in our fair isle of the UK? Let me know in the comments. I'd love to hear from you. If any of you are concerned about your mortgage, please don't forget to use the link in the description below to get in touch with myself and the team at Grand Union Finance. We're here to help you with your mortgages. If you need to get a little bit of planning in place for next year, now's the time to start. So use the link, get in touch, and hopefully we'll speak very soon. Finally, hopefully you've enjoyed this video. If you have, please do consider subscribing to the channel, click the like button, and stick around because in the next couple of seconds, YouTube is going to recommend 2 more of my videos to you. So hopefully I'll see you over there. Bye for now.